Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look at the gold market. And the gold market situation a bit different compared to for the forex markets, because on the forex the major currencies has created the new extreme points, and euro currency shows the new top after the rally on the non-farm payrolls release, and the Great British Pound as well. But on the gold market, as you can see, after the rally on Friday 2 weeks ago, market mostly bounced down and stuck inside of the range of this Friday action. And currently, we could say that long-term bearish trend is still valid, still exists on the market, and currently we will not trying to foresee a possible reversal on the market and trying to catch this moment, but we mostly will be moderately optimistic and will focus only on the possible retracement to the upside. Currently, guys, it's even not the fact that this retracement will definitely happen. But right now, market is forming some patterns that if they will be valid and if it will survive after the Fed meeting, these patterns really could trigger retracement up to the 1105 area. Since last week, market has brought some clarity on the patterns that could be formed here. So if you remember our discussion last week, there's too much patterns we have discussed because all of them have the chance to appear. First of all, based on this thrust, we said that probably we could get the brand by the sell, or maybe we will get the double ripple pattern. From the analysis of the classical patterns, we said maybe we will get the double bottom, or maybe market will form some butterfly here. We'll hit our weekly target at 1038, and only after that we'll turn to the upside. So this will really were a lot of possibilities. But during the last week, market has brought some clarity to this. First of all, we will not get the brand bottom. Actually, guys, although market has shown here the 618 retracement on this most recent thrust, that's typical for that brand bottom. But take a look that this pattern has started not quite from the major fib level. That's why this is not really quite the brand bottom. Also, guys, we will not get, at least right now, the double ripple pattern, because for a double ripple, we need to see the clear two bottoms. So because double ripple is the pattern of the capitulation, in our case this bears, and the capitulation usually happens when the market takes the last attempt to continue move trend, but continue move down. So it means that to get the brand bottom, we need to get the second bottom here that's relatively close to the first one, this last effort of the bears to continue move down and the failure, the fast reversal up. But here we would not have this attempt to continue move down. Market stands at the 618 support. That's why currently we do not have the brand bottom, the double ripple pattern. Also, as you can see, we will not get double bottom currently. So the one pattern that comes from the recent action, really could be formed, is the reverse head and shoulders. In particular, on this pattern, we will be focused on the coming week. So here it is. On the 4-hour time frame chart, we have this pattern. And currently it looks absolutely perfect. Because take a look. First of all, shoulders stands at the equal distance from the head. And this distance is 1618 ratio. It's very typical for the head and shoulders patterns. 1618, a ratio between the shoulders and the head. Second, left part of the head and shoulders take the shape of the butterfly. It's very typical for the head and shoulders pattern. Right part of the head and shoulders takes the shape of the godless triple to buy. It's really perfect. And take a look how market behaves on the reaching of the bottom of the right shoulder. This is the ABC pattern that we have traded last week, and it was completed, and this was just perfect. So 1062 618 support has been reached by this ABCD pattern. Also, guys, this very classical approach to reversal. So when the market forms the reversal swing, that rally up was a reversal swing. This market has created the greater swing to the upside than the previous swing down. After that, ABC retracement has followed. This is very typical, it's classical behavior after the reversal swing. And now, if market is really bullish, it should show upward action. The target, the minor target, minimum target that market could achieve by this pattern is 1105. So this will be the big A, B, C, bottom, D pattern. That's the minimum target that we'll be watching for. So this pattern, this target should be reached if market is really bullish. How we could behave for this pattern? For those traders who are watching for taking the long side and who would like to take the bet on this pattern, you should try to take the long position. And we will talk about it with the more details a bit later. For the bearish traders, you should do nothing, at least currently. So you should wait either when the head and shoulders will fail, how it could happen. If market will drop below the left shoulder, below the right shoulder here, that will be the significant sign of the failure. Or you should wait when the market will hit 1105, when the pattern will be completed. Only in this case you could try relatively safe, trying to take the short position. For those of you guys who would like to trade this pattern, actually we stand right now in the moment where we have to decide either to take the long position or just do nothing. Because later, when the market will approach to the neckline, it will be too late for taking the long position. Also, guys, necklines coincide with the monthly pivot point. It's very significant. Here's why. Because take a look what really we have right at the bottom on the right shoulder. Market has completed ABCD and hits the point where upward action should start. So all retracement has been done already. Right at the bottom of the right shoulder, market has formed this perfectly looking bullish engulfing. Okay. So, following the logic of the bullish market, no other retracement, deep retracement should happen here. Market just has started move to the upside if it's really bullish. So if you will not take the position right now, here it will be too late because you will have to place too far stop. It will be not really attractive. But right now, with the placing stop below the right shoulder, this will be relatively acceptable. And for those of you who would like to trade on the long side of this setup, you should focus on this engulfing pattern. So take a look at the hourly chart. The only chance that we have to take in the long position here is to try to take the position on some fib support. 1073 will be 3.8 fib support. 1069 is the 5.8, 618 fib support. Okay. But take a look that the first fib support will be accompanied by the weekly pivot point. And that's why, guys, I think that after this rally that we see in the existing of the pivot point makes us think that the upward reversal, upward continuation has more chances to start from the first level rather than from the second. Also, guys, because here it's already the starting of the extension of the market. That was the contraction, that was retracement. That was the first extension, contraction, and that's upward continuation. That's why on the way of the upward continuation, when the market already has formed reversal pattern, when the all retracement already have been done, market should not show deep retracements. That will be not very typical, not quite logical and suitable from the market mechanics point of view for a current situation. That's why maybe market will hit 1069. Maybe it will be possible, but it's more probable that market will start upward action from the weekly pivot point and the first fib support. So here you could act differently. You, for example, could try and apply scale in. So you could try to take some position here. If market will drop lower, take the another part here. You could take all position here. You could wait for these levels. So that will mostly very personal approach because it depends on the risk style or trading style. Maybe you will be watching for some additional patterns on the 5-minute chart. Maybe you will be watching for some ABCD down that will point you to the definite level where market could turn to the upside. So it's very difficult. Different approaches could be applied. But the major condition that market should hold is to stay above these lows, to stay above the right shoulder, because bottom of the right shoulder already has been created, and market should not show the deep retracement here or especially move down below these lows. That will be the first sign to the failure of the head and shoulders. So as you can see, on the gold market we have really attractive and potentially very perspective, very nicely looking pattern. and it's really could be traded probably. So you need just to decide would you like to take the long positions here or not, and decide on the what side of the market you will be. So if you would like to trade this up action at this pattern to the upside, you probably should try to do this. If you're bearish and you would like to take the short position, so you just need to wait when this pattern will fail or where it will complete the target. After that, maybe some opportunities for taking the short position will appear.